Hello, welcome to your TLT update. Just want to give you another update because the price has reacted very well to the support area, the trend reversal area I communicated over the last few days in these updates, in these video updates. I'm tracking the TLT because I find a lot of you are interested in it, but also it does provide a very interesting structure, given that we might have started a C wave rally. If not now, then we could go a little lower and then start a larger B wave rally from there. But I'm very open to the idea. Let's say I was very open to the idea we should see some further upside in the short term. Now, obviously, we're going to get to a decision point because what we saw was a first micro 5-wave move up. So there was on the smaller time frame, and let's say a setup, right? 5 waves up. After a 5-wave move up, we have some clarity that the market should go higher. Whether it's the white scenario, in which this is only a B wave rally, or it's turning into the yellow count, where this is a larger 5-wave move, only this rally will show us. But in both scenarios, there was a good chance for further near-term upside, and that's what we've seen, and that's why I wanted to give you another update, because we had 5 waves up, we had 3 waves down, and the support areas, generally for a B wave pullback, but also for a wave 2 pullback, it's typically the area between the 78.6 retracement and the 38.2 retracement. Invalidation point red line at 83.30 wasn't even needed. So yeah, we've seen a reaction. I mean, is this the breakout? It kind of looks like that. We have broken above the previous high. I wouldn't call it a decisive break, so therefore this support area remains relevant in case we need another test of it. That can always happen in a wider wave 2 or wave B. I mean, this could happen like that, for example, like a wider so-called flat correction, no problem. But for now, we have seen the start of some upside momentum here. Some upside momentum has come in. And I want to give you the targets for white wave C. And then we have to see how the market reacts to this pivot. So what we do, we measure the length of that A wave up, this initial 5-wave move up. We go to the low of the B wave, the swing low, the price reacted to the 50% retracement. And let me adjust that. The area around the 100% extension is typically where a C wave could finish. The third wave should go a little higher, possibly to the 123.6 extension. But also the C wave can use the entire blue box, no problem. It's just that if we get at least to $88.76, then it can also be the yellow scenario. So that means the short-term focus remains on higher prices. That hasn't really changed. And then maybe over the next few sessions, we're going to reach that blue zone. Condition for that is obviously that we're now holding that Monday low. Okay, if we break below it, then it can attempt a reset of wave B, wave 2. So it's this support area which is still relevant. But obviously the reward to risk ratio has changed, right? It was really good down here. Now, obviously, as we are halfway between support and pivot, target, you could say, that reward to risk ratio or profile isn't the same anymore. So the next upside target zone is here between $88 and $90. So we'll see if the market can get there. That's the next target. And that's also where the previous swing high is located, here around $88. So I think the next few sessions will be key. Depending on how high we indeed push, we will add support for the wave 4 to the chart. And that is how we can then distinguish these two scenarios at that point. So at the moment, it's impossible to distinguish between yellow and white. It will become clear if we get 5 waves up in one, because then I can add support for wave 2. That would be clearly the yellow scenario. If we see a strong rejection at $88, I think it would be more clearly the white scenario. So these are the signals to watch out for. For now, we're kind of in a space in which we would like to see the market go higher in both scenarios anyway. That's pretty good. Those are typically good setups in general when in both scenarios, bearish and bullish, the market, let's say, is supposed to. I mean, the market is never supposed to do anything, but you know what I mean. I mean, when the market should really react to support in both of these scenarios. So yeah, I hope that helps. Thanks so much. Bye bye.